Let's turn to crypto. Names like Coinbase and MicroStrategy taking a hit today after the CFTC announced charges against Binance and its founder, Changpeng Zhao, also known as CZ. Joining us now to talk about the fallout is Dan Dolev, senior analyst at Mizuho. Dan, I want to get your thoughts on this, especially given the fact that Coinbase had such a rough day today. Was that stock fall warranted, or is it potentially in a position to actually gain some market share if regulators are coming after Binance?
No, I actually don't think it fell enough. I have a $30 price target. I actually think it should go down to 30. I think this is what you're seeing now is the beginning of the crack. This is a real crackdown on crypto. And I would be, if I owned any of these crypto names, I would be really, really worried. Last week, SEC, Wells notice. This week, this comes on Binance. I think every day, every week, something's happening, and people are just like, they just kind of continue to whistle, past the graveyard.
So Dan,
I think this should continue to go down.
So Dan, why just 30 then? I mean, if I'm taking an extreme point of view, the dollar and gold are looking pretty darn good now compared to where they have looked over the past couple of years. What is the business model around crypto beyond just Bitcoin? If you think Bitcoin is great, what's the business model that allows a Coinbase to thrive into the future if people aren't trading multiple altcoins without a whole lot of regulation?
There is no business model, right? I think I kind of agree with you. Is 30 the bottom? Probably not. I mean, it's probably a good stepping stone. If the government cracks down on all these altcoins and staking, that's 35% of Coinbase's revenue. If they crack down on Ethereum, you're adding another 20-30%. Then what are they left with? Bitcoin. So I think, the fact that retail's dead, all these alt revenue sources like, USDC is plunging. That's, 80% of their interest income is from USDC. That's like the market cap has been plunging in recent days. I think there's no business model. And I think the outlook is pretty dire for these exchanges, and especially Bitcoin because it's public.
So let's dig into that a little bit further then. If you're seeing a broader crypto crackdown by regulators, arguably you're also seeing a bit of a turf war emerge between the CFTC, which today went as far as classifying Bitcoin and Ether as commodities, again, versus the SEC. And you mentioned that Wells notice on Coinbase. What does further regulation actually look like? How should investors who maybe are a little more hungry for risk and willing to invest in this sector, even if you're not, how should they be thinking about what that's going to look like, how it's going to materialize?
I think it's a great question. So, and if you go back to Gensler's comments from a few months ago, he also said everything outside of or other than Bitcoin, or everything outside of Bitcoin is a security. Bitcoin is a commodity. So I think, and I've said that many, many times before, if you really believe in the category, and I kind of hate to say that, might as well just own Bitcoin if you really believe in the category, because it's pretty much kind of it's going to be there to tell the story of this era. Whether or not it should be worth 20,000 or 25,000, I don't know. But if you have one thing that's going to last from this era, it's probably going to be Bitcoin. I'd say more than 95% of everything else should go away. So I wouldn't invest in any of the public exchanges, including, of course, not Coinbase. And I wouldn't invest in any coins that are not Bitcoin.